Welcome to another episode of Earth911's Sustainability in Your Ear. I'm Mitch Ratcliffe, and we're back to have another conversation with an innovator reshaping the economy and our lives for sustainability. And you know, after food, people had probably been talking about the weather longer than anything else. And in today's increasingly chaotic climate, weather information is going to be more relevant to every decision we make. Our guest today is Nick-Cavanaugh, founder of sensibleweather.com, a Santa Monica, California provider of climate risk information that helps anticipate how weather will impact our everyday lives. Sensible Weather's first service is focused on lowering the risk from weather impacts for travelers and travel companies, from airlines to resorts. This allows travelers to book trips with guarantees that if weather interferes with their plans, they can get a refund. So for instance, if the concert they're attending is canceled because of rain, they'd be able to get a refund back. Nick's information allows for an insurance contract to be created with the travel booking. Travel companies benefit from providing more confidence about weather-related disruptions, and travelers can ensure that they get the experience they pay for or their money back. And you know, in the future, we can imagine a lot of services that provide weather risk assessments, such as for a new home or planning tools for picking the best outdoor wedding date in a given location, or many other ways that weather data can be applied to daily decision-making, because we're going to need it. 2021 was the second most expensive year in history for weather-related damages at $145 billion in various forms of damage, from storms, floods, drought, wildfire, tornadoes, hurricanes, and more. And that doesn't include all the tertiary expenses that arise from extreme weather events. Weather data and easy access to smart interpretations of how weather will affect our lives and plans is going to be more important every year as we enter the climate crisis era. You can learn more about Sensible Weather at Sensible Weather, all one word, no dash, sensibleweather.com. And welcome to the show, Nick. How are you today?
Doing just fine. Thanks for having me.
Well, you know, first I want to get to the most practical question of all. Tell us how a sensible weather guarantee works and what it covers in a travel setting today.
Sure. So Sensible Weather Guarantee allows travelers or event goers to offset any weather risk that they might have if they're doing some form of outdoor activity that's highly dependent on the weather, where their experience is highly dependent on the weather. They can buy a Sensible Weather Guarantee, which automatically pays them back if they experience inclement weather while they're doing whatever it is that they're doing. Mm-hmm. These products are sold point of sale with online distributors, brands that you already know and love. So you really don't have to go out of your way to find it. Really, we're offering a customer service type product for our travel partners, which then flows through the consumers to allow them to basically enhance their experience.
So who are some of those travel partners that you can buy a weather guarantee through?
So we're very active in theme parks, ski resorts, and camping space right now. Mm-hmm. In particular, Tenter, CampSpot, and a company called Catalate, which powers a bunch of checkout flows for theme parks and ski resorts. So you may not know the name Catalate, but you surely know some of their partners. Mm-hmm. When you're booking your campsite or your ski tickets or whatever it is, you're allowed the option to buy a weather guarantee in the checkout flow, which covers the day that it is that you're, say, going to the theme park.
So what happens when bad weather strikes? My experience is some of the product assurance insurance that I have purchased is that it actually is very hard to get the support when you need it. What does a customer have to do to get their refund, and what steps do they have to take?
Sure. Yeah. I mean, that's one of the key pain points that we're trying to alleviate. We're actually so-called parametric insurance company, which means we're entirely data-driven. Mm-hmm. So everything that we do is algorithmic, meaning there's no claims process. So on the day that you say you're going to the theme park, that theme park opens at, let's say, 10 a.m., we actually pay out based on forecasts. So we look at a forecast sometime between 9 and 10 a.m. for the location of that theme park. And if there's rain in that forecast, we actually automatically trigger a text to that consumer saying, hey, it's gonna rain this afternoon. It's gonna rain so much this afternoon. You're eligible for a reimbursement on your ticket price today. There's then a link. You can click that link and receive your refund.
So I guess the question I would ask from the destination's perspective is, what if they decide to request a refund but also attend? Does it cost that destination anything, or does the insurance insulate them?
No, and that's actually another unique thing that separates us from traditional travel insurance. You are totally permitted to go. So the idea is, if you go to a theme park, implicitly you're expecting a beautiful sunny day, and if you don't get it, that experience is diminished. However, if we refund you some or all of that ticket price, that doesn't mean you can't go and have a good time. So we're trying to basically turn the scenario on its head, where maybe it's not exactly what you wanted, but it's free, and you can still go and have a great time, and moreover, use that money to go again.
Okay, that's really intriguing. So you're offering a form of travel insurance. Are you the insurer, or do you partner with insurers to cover the risk and focus on the data analysis?
We are an insurance company. We manage our own balance sheet. We cover all of our own risk. We have a third-party capital provider, capital partner, which is a big name financial company that you would have heard of. But yeah, that allows us to essentially, as a startup, we can move quickly and build products that are really the products that consumers want, because we can back all of our own risk.
So how far out in the future can you offer a guarantee? I mean, could I book a trip for next July?
You can.
Really?
Yeah, practically speaking, how far out we're willing to book a weather guarantee is limited by how far out travelers book their travel events. There's some question with climate change and non-linear trends where sure enough, it's at some point we would be, at least with our current underwriting platform, we would be uncomfortable pricing a risk. However, that point is certainly far further away than consumers generally book their travel.
So you have a very good idea of the general behavior of the weather in a location over historical timelines, but to your point, there are a lot of disruptions in trends going on. How much risk can you afford to take?
So we use both historical and forward-looking analytics. So some of our underwriting comes from historical data, as you said. We also use models to project forward, any sort of risk that we might have. What we're not currently using today is climate models, which allow us to do projections, say 10, 20 years out. With respect to the types of risk that we're underwriting, say the probability that it rains 3 or more hours at a given location in a given day, this is not what we would call an extreme event. Generally, what we're looking at for underwriting are relatively common occurrences. Obviously, people travel to weather impacted destinations or places where they want to go experience the weather, generally because the weather is good. Most of the time the weather is good. That doesn't mean that there aren't days that are impacted by bad weather, but it's not necessarily a hurricane. Sure. That's the thing that we're trying to ensure. So that actually allows us some flexibility in underwriting and the risks that we take. Meaning that we can build products where we're essentially pretty safe financially. Moreover, the types of losses that we experience our losses, financial losses for a given contract, are generally not catastrophic in nature. We're talking a couple $100 for some tickets to a theme park versus, say, a catastrophic loss, $3 million for a home in Miami or something like that.
I want to talk about that idea later, but let me ask a couple of questions about the discontinuity we're seeing in the weather. Are you seeing changes in weather patterns in recent years? And what do you think the most important changes in weather or atmospheric patterns that we all should be aware of?
Absolutely. I mean, it's so my career, prior to my career in finance and as an entrepreneur, I was an academic for 6 years. So true enough, climate scientist doing research, in particular on weather variability and how that changes as a function of climate change. And moving into my grad school and my academic career, I think the first question that you ask yourself is, how real is everything that you're hearing about? And it's clear as day. I mean, you look at the data, it's impossible to miss. You look at global temperature records or even temperature records at a particular location, they're going up. The interesting thing, however, and where a lot of my academic research focused and where, what impacts a lot of our underwriting is actually variability. So if you look at, variability of weather, say like, the variance or the standard deviation of temperatures at a given location, they're actually going down, which is pretty interesting.
The variability, not the temperatures, correct?
Yeah, the temperatures themselves are going up. So average temperature goes up, but the variability around that average is actually going down. So, any given day is generally going to be closer to this mean, which is going up.
But
however,
you can project how it's growing up. They're going up is what I hear you say.
Correct. Yeah, you can project changes in that either looking at historical data and doing some sort of trend analysis or looking at climate model. But so and then another interesting on top of that is while that variability is going down, generally the extremes, so the very rare events that are generally the most damaging, those occurrences are increasing. So it's a weird kind of juxtaposition, and that day-to-day weather is getting less variable. However, these extremes, like hurricanes or heat waves that are most impactful to people's lives are becoming more prevalent. So yeah, I mean, it's a really interesting field to study, and moreover, this type of data is underwriting analytics rolls directly into what we're doing and impacts the probabilities of the contracts that we're writing.
So, what other elements of understanding long-term climate risk can your weather data help us address? Can we start to think, and to your point earlier about the different kinds of contracts you could write, could you create a market for hedges against weather impacts on crops 10 or 20 or 30 years out?
You absolutely can. And that's a very pertinent question. The way that we've built Sensible is as a platform. So we've built, we call it the Climate Engine, which is a technically use case agnostic weather and climate data service. And we are, we Sensible, who are writing these trip protection contracts, are its first customer. That being said, that platform can be used for anything. The platform that we've built is unique in that it's incredibly fast. So it enables very high throughput of data. Moreover, we can service consumer sectors that are generally very demanding. So consumers want effectively, instantaneous responses when they're shopping online or what have you. And so the first product, this consumer product that we built on that, our platform is unique in that we're able to service, hypothetically tens of thousands of customers all at once because we can flow a lot of data very quickly. That being said, the same data platform, as you said, could be used to underwrite, say, crop insurance or energy looking 10, 20 years out in the future.
Yeah, it's interesting. So you could, as a utility, you could say, we expect we're going to have this much demand in 2030 and write a contract based on the weather assumptions underlying that projection and then hedge the risk.
Absolutely. Yeah. I mean, I think the bigger question, in 2030 is what does our energy or electricity specifically generation look like? Right now, sure enough, it's very hot, very cold. People use a lot of electricity. They,
Sure.
either for heat or AC, or they burn in this country natural gas for heating. But in the future, that might not be the case. Moreover, on the generation side, we generally burn in this country natural gas to supply a large portion of our electricity. However, the trend is pretty quickly shifting towards wind and solar. So 10 years from now, while these extremes which impact supply and demand in the energy sector may be more commonplace, we might very well have an electricity grid that permits them because of basically because of innovation.
Well, but what your technology allows is for them to have more levers to pull in order to offset the risk associated with their infrastructure investment planning. So, for instance, to your point, the generation will be a factor in what the demand or the response to demand is, say in a heat wave, but the risk associated with servicing customers in the heat wave is financially insulated from how you do it. And in fact, you could lower the cost by switching to renewable and even improve your profit profile for 2030 or 2040 as a result.
Absolutely. I mean, that's kind of this overarching thesis behind climate insurance generally, whether we're offering it to travelers or in a commercial setting, say like in an energy grid. If we offer some form of financial hedge, which explicitly puts a price, puts a cost on weather variability, that has the potential to change behaviors. If you're an energy generating company, where your options are either buy a hedge or change the way that you service the electrical grid, which one is cheaper? Great question. Or it's, ideally it's some combination of the two is where it's, where it's probably going to land.
So let's talk about a few of the ways that you might use this in the future. I'm just, and this is curiosity. I happen to be looking for a new home, and I use flood factor to check whether or not the location is prone to flooding. Would it be possible to get extreme weather forecasts for a location such as hurricane, flood, or extreme heat, and to price that appropriately in order to achieve the policy goals we have? Because one of the problems with insurance right now, flood and fire insurance, is we pay people to rebuild exactly where they were impacted, instead of moving to an area that would be less prone to, for instance, wildfire. Could we use your longer term weather forecasting as a tool for better pricing risk to shape outcomes?
Absolutely. I mean, so, hypothetically, we can do that now on a location basis. We can assess the probability of, say, heat wave or a storm. What we don't have in our current system is the translation layer that says, okay, if you experience winds that are 80 miles an hour, this is the damage that happens to your house. Right. And that rolls into insurance analytics. Yep. But in the future, that's absolutely an avenue that we could go. There are a number of startups that have popped up. This climate risk analytics space is absolutely booming, and there are a number of startups in the last couple of years that have popped up with the capability of doing that. Currently, as far as I'm aware, they just sell their data. They're not directly rolling it into insurance contracts. But I also do know that there is demand from insurance companies that write traditional homeowners insurance policies for those types of analytics. I think the real question, related to property owners and home insurance moving forward is how does the industry adapt to these types of climate risks when the risks themselves are dynamic? Do the types of analytics we provide, will they roll into the underwriting for traditional homeowners insurance contracts that you buy now? So the underwriting behind pick your home insurer, will that just be better priced, or will new products pop up to help mitigate some of these risks? And those products would probably come from specialists like Sensible. Right. Obviously, my bet is in the latter. New products which fill a void, a climate gap, a protection gap that both consumers and businesses face. But really, it could happen either way, and both ways, I guess, point at solving the same problem, but in a slightly different way.
So could you also, for instance, create contracts around ensuring supply chains against weather disruptions, and allow business to better hedge the risk associated with continuing to manage their sourcing of materials?
Yes. So that's, supply chain, weather impacts to supply chain. First of all, huge market. As we continue to globalize economy, there's shipping, boats in the ocean all the time, moving goods all around. What happens in the ocean? Weather, storms. Generally, what happens now, there's a huge market for weather and climate analytics in supply chain. Boats, for example, are using forecasts dynamically to potentially alter their routes if there's some storm ahead and there's right in their path, they might very well go around it. I'm not aware currently of anybody offering a risk product, which if that boat chooses to take a detour and it takes another 3 days to get to the port, potentially that has some financial impact, and that could be mitigated by an insurance contract. I'm not aware of anybody doing that, but that's potentially one of the avenues that we could go down, because it's absolutely a huge market. And as we continue to globalize, then there's more and more goods moving around at all times. Moreover, the types of weather events that would be impacting those supply chains, may be increasing or changing. There's absolutely a market for that.
It also sounds like there could be a market for weather risk for farmers and food production companies, based on what you understand about the changing weather patterns locally. Is that another area that is potentially fruitful?
It is. So that certainly exists, though.
But so, you can do it better.
better, different. I mean, I'm actually,
Okay.
so I think crop insurance is an interesting one, crop insurance related to weather, and that farmers actually have many ways to mitigate financial risk. One of them would be buying, a type of weather cover, which we could provide, but they could just buy traditional crop insurance, which covers
Sure, but there are
yield
also
loss.
risks. There are also risks for field workers, for instance, that are going to emerge as weather becomes, certain areas become uninhabitable, or at least not friendly for human work. Is that an extension of traditional crop insurance that we should be thinking about in terms of overall risk associated with the food supply?
Well, that's an interesting question. Implicitly, the timescales that you're talking about are pretty long. That being said,
once you've lived a few decades, you realize they're not as long as they think.
Well, and I was going to say, of course, it takes time to cultivate land to, basically build a farm around it. What we are seeing, I'm not aware of any type of financial risk transfer, or at least insurance-related risk transfer. But what we do see is populations moving further north.
Right.
And that's I guess a different way of people mitigating future risks, or taking, or maybe even just taking advantage of opportunities. Land around the frost line, where historically, in winters it would freeze. If that frost line moves further north and those lands are warmer, those lands may become arable for the first time. Sure. And so land value that used to be worth effectively nothing, may be, valuable. And so I do know that there are, people buying up land with the expectation, and in 20, 30 years, that land is more valuable than it is now due to a future climate.
That's a fascinating idea. The idea that you could proactively pick your target in terms of new investment in food production, or locating a new city.
Yeah, absolutely. And energy as well. The classic one is natural gas frozen in permafrost. This is actually a pretty big issue, related, increased, how you release it from the ground is through fracking, which is unfortunate. But there's actually, quite a lot of combustible fuel that's basically trapped in frozen ground. And if that ground is not frozen anymore, then there's an opportunity to mine it.
Or it ends up in the atmosphere without anything.
That's the downside risk, of course, which everybody's very concerned about. It just kind of kicks the can down the road of burning more fossil fuels.
Well, Nick, it sounds like you have a very wide range of opportunities. What are your next steps? Where will Sensible Weather go next?
So in the immediate future, the next 6 months, we're very, very focused on this travel product. As you can imagine, I started this company a few years ago, basically right before COVID hit, which is pretty wild to be building a company that services the travel sector, and then within the travel sector is immediately shut down. That being said, consumers are traveling again. Moreover, they really like to travel to places outside, as you might imagine. So there's a huge opportunity for us right now. Very near term, looking at this spring, summer, ramping up business, new partners. You're going to be seeing announcements from us, soon here as we roll into the spring. So that's our immediate focus. Beyond that, it's a good question. We've got an eye. We've talked about some of the markets, some of the products that we're thinking about. Today, you and I just now, we have to pick and choose which ones we go after. But certainly in the near future, we're starting to think about expanding our product line.
So how can our listeners find travel options that are insured by Sensible Weather?
So if you go to our website, you can find our, a list of our travel partners. Will be, as I said, some announcements coming up. We're really, focused on ramping up those distribution partnerships moving into the summer, and increasingly you're going to find us all over. Whether you're booking an airline or hotel, or theme park, or a water rafting trip. So keep an eye on the news, keep an eye on sensibleweather.com, and you'll be seeing us in checkout flows everywhere.
Well, Nick, thank you very much for taking some time to talk with us today.
Yeah, really appreciate it.
We've been speaking with Nick Cavanaugh. He is the founder and CEO of sensibleweather.com. Sensible Weather is all one word, no space, no dash between sensible and weather. Sensibleweather.com. We're going to be talking with several different data-driven companies over the next few weeks on the show. And it's really interesting to see the number of data sets that are going to begin to converge on the problem of understanding not only what's going to happen if we don't do anything, but how the decisions that we make and the changes that we implement in the way we run our businesses, manage our cities, and grow food and move it around the world, along with all the other products that we rely on, are going to provide an opportunity to squeeze a whole lot of inefficiency out of the economy. And that is also the key to lowering our emissions, to reducing our water usage, to leave a lot more of the environment for nature. So we encourage you to take some time to learn more about how these digital models, whether it's sensible weathers or these new ideas called a digital twin. We're going to have a guest next week to talk about that. Digital twins are essentially the metaverse model of real world, where you can go into a space immersively and try new things and see how it changes the outcomes. The use of power in a building, for instance, to heat or cool it in response to the environment. So it's going to be a really interesting, well, there's no doubt about this, a very interesting 20 or 30 years. Hopefully it turns out well. And these tools seem to point in the direction that it could. This is Earth911 Sustainability in Your Ear. I'm Mitch Ratcliffe, and we're going to be back with another innovator interview soon. I hope in the meantime, you'll take a few minutes to share this podcast or one of the others that we have done with your friends and family. Getting more ideas out there is going to create less waste, and that is the key to our sustainable future. We'll be back soon. In the meantime, folks, take care of yourself, take care of one another, and let's all take care of this beautiful planet of ours. Have a green day.